It's April 8, 2014, current time 11:16 GMT. Jay Meisler here with the daily Forex trading outlook. Um, this is one of those rare days, I'm sorry, where the dollar moves in the same direction against all currencies, including emerging market currencies. Market used to trade that way many years ago, but in modern times it's rare to see the dollar move um, against all currencies the same way. What we're seeing here is, to a certain extent, at least in currencies like the yen, liquidating positions. You've seen the commodity currencies lead. Sterling will also get a boost out of data, while the euro dollar is following with a lag. If you look at dollar yen here, I mentioned it yesterday. I don't know why it took 2 days for it to finally crack that 103 level, but it did, and we just got to 102.50, which is clearly the pivotal level today. I mentioned yesterday that there's a moving average cluster here between the 100, 102.91, the 20, 102.56, and the 50-day 102.36. 102.56, which is the 20-day moving average, is very important on a closing basis. And we only one left here is 102.36. So we moved right into the zone that I mentioned yesterday was the risk if we got through 103. So it has performed technically. Do have a trend line here about 102.17. It's a minor one, but worth noting. And if you look at the charts, key levels are 101.87. You could use this actually, 101.18, and then you get below into the 100s. So for today, it's 102.50 is clearly going to set its tone. Market is liquidating. It's more than just, it's not really, as they call a spec move in that respect, because the market seems to be buying the dips and getting stopped out. So just watch 102.50. It's going to set the tone as the day goes on. And the risk, as I point out, 101.87 and 101.18. Hard to believe we're talking about that. Whenever we were talking about 105 just a day or two ago. This is still just a correction that I said would only accelerate if we can get below that 102 level. On the upside, you have to get at least back above 102.80, put 103 in play again. You have to watch stocks today. That's been driving everything. Drives bonds. Last I saw, the stocks were pretty close to flat in the U.S., but they have taken quite a hit in the last couple of days. If you look at euro dollar, we got a trend line comes in around 137.75 or so. But if you look at where it's trading right now, 137.65, it's only 8 pips down on the entire year. That's 8 pips in 3+ months. Shows you this has been a zero-sum game for this currency. Well, the dollar's down against just about everything else, except the Canadian dollar, and that currency is well off its lows. If you look at the euro dollar, you look at the 1-hour chart. I mentioned yesterday 138.05 to 20. It also includes the 20-day moving average around just above 138. Is the point of pain. There is really nothing above it. If you took that out, then you really would squeeze the shorts out of the market. But as I said, you've got to get closer to 138 for the market to start to sniff those stops and go after it. Currently, the focus is still on 137.50. It got close to it yesterday. Got close to it again overnight, where it was stuck in a very tight range. Finally broke above it, but it hasn't gone that far. So as far as euro dollar goes, it's got to get above I would say 137.80 to put 138 in play again. Have to go below 137.50 for it to lose some of that bid. 137.50 could become a magnetic level if the dollar finds some support elsewhere, because the euro dollar is lagging. So I said there's no real obvious stops above here. On the downside, the support is not till below 137.40 at the overnight low, 137.37 I believe it is. So 137 is going to set its tone. If above it, it'll have a slight bid feel to it. If it goes below it, that bid will dissipate. But euro dollar is lagging and not leading, and that's very important to point out. One more thing, at the bottom of this page, you're going to see a link to Psychology of Trading. It's an article I wrote. It's got some insights that you're really not going to find anywhere else, I don't think. And not only that, it could even change the way you look at trading. I think it's worth reading. You can click on the link. It's embedded in this video. To just click, go to the article. I think you'll find it more than worthwhile. Good trading and good luck.